Hi, I'm Jenny Brown. Welcome to this week's edition of MFB News. I hope you're doing really well and that you've had a fantastic week, being able to get outside and enjoy some of this really lovely sunshine. Actually, I was actually reminiscing that this time last year me and my partner were kind of talking about the fact the weather was really warm and sort of joking about how it was going the wrong way for Putin because we weren't having to use all our gas up in our houses for heating because it was really warm. And I think it literally snowed like a couple of weeks later. So I'm going to stay quiet this year around. Now, in terms of what we've got for you this week, we're going to do our usual update in terms of lender changes and pricing. Don't worry, it's still very, very positive. We're then going to do a bit of a deep dive into one of the reports, the very good reports that are released by the Mortgage Works. And this is where they've reached out to thousands of landlords, and landlords have in turn responded about how they're feeling about being a landlord, how their portfolio is performing, whether they're buying, they're selling, this kind of stuff. And they do it by region, so actually we can do some fairly interesting comparisons to see by region how things are shaping up for your landlord peers. And then finally we're going to cover off our latest feature question of the week. Thank you so much to the gentleman who sent a question in the comments last week on YouTube. We're going to be answering your question, which really does remind me to say, if any more of you have questions you'd like answered, it doesn't really matter what it is as long as it's mortgage related. We'd be delighted to help, so please do leave that in the comments below. Now, the other thing just to mention is that it's kind of event season in the mortgage world. So yesterday I was fortunate enough to attend an event hosted by iHouse, one of the very wonderful landlord associations down in Brighton. We've got a few more of those coming up in the next few weeks as well. Friday and Saturday we're attending the Property Investor Show at the Excel in London. So if you are in London or within a sort of commutable distance, the show is on Friday and Saturday of this week. It's a wonderful show. It's a very, very big exhibition. There's people exhibiting on all types of stuff which is property investment related. So it can be accountants, tax advisors, legal advisors. It can be people selling property management software, mortgage brokers. Also there's people selling property overseas. It's a really diverse range of furniture packages, but it's very, very good and it's free to enter. But if you are going to be at the show, we do have a stand. We'd love to see that. I'm there both days, and I'm also doing a presentation at 11:25 on both days as well. So do come and say hi if you're passing. But let's move on to the MFB News content now. It's been a relatively staid week in terms of news and movement in terms of pricing and stuff. So in the run up to this moment in time, we have had the news that base rate was being held at 5.25%. We had the news that inflation had performed better or come down more quickly than expected. And we had the reaction from the capital markets where swap rates actually moved down quite nicely. So just from memory, when I spoke to you this time last week, 5-year swaps were sitting at around 4.5-ish%. Now they have floated back up slightly. There are reasons for this and I'll come on to that. So where are we? So 2-year swap rates as of lunchtime today, and today is Tuesday, 5.082. For comparison, 1 month ago they were at 5.398. So they've come down by circa 30 basis points. 5-year swaps as of lunchtime today, 4.572. 1 month ago, 4.756, circa 20 basis points lower than they were a month ago. Now, in terms of why things are kind of floated back up slightly, I mean, this is a very, very fragile thing, and everything can kind of impact these numbers. My suspicion is that the concern over a slight increase in inflation numbers coming through in the next month or so may have impacted those. That's going to be largely down to the cost of oil increasing because of cut in production, and also the weakening of the pound to dollar exchange rate because largely of the news about base rates staying the same. So I don't think there's anything to read too much into this. And actually, in terms of the pricing changes from lenders, they're still going down. So I wouldn't worry so much about the fact that swap rates have increased a tiny bit at this stage. So what have we seen from the lenders in the last weeks? So first of all, Paragon have released some new 5-year fixed rate products, and these are now starting from 4.69%. They've also got repriced actually all of their offering, which is very, very competitive. And they've also introduced some products which have some relatively low early repayment charges. Now this brings up an interesting conversation that we have with clients quite often at the moment. What they're saying is, I don't mind going for a 5-year fixed rate, and actually, broadly speaking, 5-year fixed rates are cheaper than 2-year fixed rates. But I don't know that I really fancy being tied in for 5 years because I think interest rates are going to come down, and incidentally, I share that opinion. So it is a bit of a tricky one because obviously people want the cheapest rate they can get right now. which is generally speaking a 5-year fix, but actually people don't want to be stuck in for the whole 5-year period. So what we're talking about a lot more with clients at the moment, and we're getting asked about, is the early repayment charges. So actually, if I did want to pay this back in year 3, what would I be in for in terms of fees from the lender? Because some people are actually thinking, well, look, if I have to take a 5-year fixed rate now, so be it. But actually, if rates have come down sufficiently and I could remortgage in, say, 3 years' time to something much lower, what's it going to cost me to do so? Do I think there's actually some kind of sense in being open to that as a concept? So very, very interesting. So good news from Paragon there. And just to kind of backpedal ever so slightly, the lenders we're talking about, just to kick us off, are our specialist lenders. So you can kind of take it as read, these lenders do limited companies, HMOs, multi-units, landlords with 10 properties in the background or more, that kind of stuff. So Paragon fit very much in that camp. Now we've also seen Foundation Home Loans make some monster reductions to their pricing in the last week. The most notable, whereas they dropped a rate down by 1.1%, which is, fairly chunky. So a big wave of reductions from Foundation Home Loans. We've seen MT Finance bring their pricing down by up to 16 basis points, 0.16%, so I shouldn't talk in jargon, should I? LendInvest have also launched some new 5-year fixed rates. These are from 5.89%. They did have 5-year fixed rates. They then withdrew them and were waiting to reprice, and they've just come back in. So they had a kind of gap, but they didn't have any for a few days. LendInvest, lender, limited companies, HMOs, multi-units. One of the things about LendInvest actually that's very, very good, one of the strongest things they have, apart from the fact they offer incredible service, they're a lender who leans very heavily on technology solutions. So actually things like open banking would be a good example of that. So their process is very quick. But actually the thing that we think they're particularly good at is day one remortgages. So what they do is they will remortgage a property that you bought within the first 6 months or at any point of ownership. There's no restrictions, and they will lend against open market value, irrespective of how much you've paid for the property and whether you have or haven't done any works to it. So some lenders will do day one remortgages, but they're going to want to see an uplift in value to be demonstrated or be because of the fact you've added value to the property. LendInvest don't have this requirement. So that's always one to kind of just know about. And I've also seen the mortgage lender bring out some new pricing. So they have a standard, 2-year fixed rate for standard properties, so no HMOs or multi-units. 2-year fixes here from 4.69, and on multi-units and HMOs, 2-year fixed rates from 6.19%. So not bad at all. And then we've seen Aldermore bring out a limited edition product. So 5-year fixed rates here from 5.09%. with a 7% arrangement fee. Now, Aldermore as a lender, excuse me, sorry about that, very, very flexible. So they're able to do things like led companies, trading companies. They're open to lending on HMOs, multi-units. They can do a multi-property application, which is quite unusual. So what that means is that you can have one mortgage application with many properties, as if there's 2, but up to I think it's 10 properties sat within that one legal charge. So some of the people really go for that. Some people aren't as keen on the idea of it. But very, very good pricing from Aldermore. We've also seen the Mortgage Works reduce limited company rates by up to 0.4%. So pricing here from 5.79. Another one that's come out that's quite interesting is that Lambay have released a 2-year tracker at 0.34 over base. Now, the good thing about their trackers that they've just released is there's no early repayment charges whatsoever. So some people would be of the school of thought that actually base rate has now capped out. If it does move again, it will be 25 bips, so 0.25% one more time, and that's going to be it. And then at some point in the future, hopefully towards the back end of next year, we'll start to see base rate coming down. So some people have the mindset actually a tracker is not a bad option at the moment. If it has no early repayment charges, even better, because that means that where the point comes where base rate moves down, and also actually if fixed rates come down, because fixed rates will come down before tracker rates and base rate comes down. So actually it would give you the opportunity to move on to a different deal without any early repayment charges. So something to have a think about for sure. Now, in the less specialist end of the market, the more straightforward lenders, we've also seen Birmingham Midshires reduce their pricing, and Virgin as well. They've reduced their rates by up to 0.38%. So as you can see, lots and lots of changes going on with the lenders, all going in the right direction, thankfully. And hopefully we'll have more of the same for you again next week. Okay, now moving on to the report from the Mortgage Works, and I really like these reports because the Mortgage Works do spend an inordinate amount of money employing a market research company to go out and speak to thousands of landlords, and they kind of bundle it all together into very kind of easy to read information and deliver it to people like me, so it's very good. So thank you, the Mortgage Works, for doing that. So this report is called their Regional Snapshot Report and is covering off Q2 in 2023. Now, looking at the report in the round, first of all, they're saying that landlord confidence has declined for all of the 5 metrics that they measure in Q2, most notably for rental yields, which has fallen by 9% since Q1. The proportion of landlords making a profit continues to decrease this quarter, albeit by a modest 1% to 77% of landlords. So actually 77% of landlords are still making a profit. I think is probably the kind of better bit of news there. Several metrics have remained mostly stable since Q1, including average rental yields, instances of rental arrears and tenant demand. Recent acquisition has increased slightly by 1%, whilst recent divestment has decreased by -4%. So what it looks like here is that actually there's a very, very slight uptick in the number of landlords acquiring properties and a slowdown in the number of landlords who are actually selling properties. The other key metric that I thought I would just share with you is that across all of the respondents from the whole country, the average rental yield they were receiving was 5.2%. So moving into the more granular detail of region by region. So first of all, in terms of rental yield, so which regions are achieving the highest levels of yield? Wales came in at the top spot of 5.8% and the northwest of England at 5.7% yield. Looking at the kind of other end of the scale, the weakest yields seem to be coming from the West Midlands at 4.6% and central London at 4.4%. Now, in terms of where landlords seem to be most active in terms of acquiring property, so actually Yorkshire and the Humber came out on top with this one. So 10% of the respondents there had bought a property in the last 3 months. 10% is quite a lot, isn't it? Interestingly, the lowest respondent was Wales, where nobody had bought a property in the last 3 months. There's nil point for Wales on that one. Now, in terms of the number of landlords that are actually divesting as a percentage, so the question was, had you sold a property in the last 3 months? The area where the landlords seem to be selling things off the fastest is the northwest of England, who had sold, or 19% of respondents had sold a property in the last 3 months. Conversely, the areas which have seen the slowest level of people selling things off, central London, southeast England, also southwest of England, all of whom were just at 9%. Now, in terms of rent arrears, and obviously a subject very close to my heart, which areas are experiencing the highest level of rent arrears? So the question was, have you had rent arrears in the last 12 months? And then as a percentage of respondents, the areas which seem to be having the toughest time with this, the northeast of England were at 56% of respondents. I mean, that's huge, isn't it, when we think about it? East Midlands at 48%, northwest of England 49%, and Yorkshire and Humber at 48% as well. So these guys are the ones who've seen the highest levels, or most regular occurrence, should we say, of rent arrears. Conversely to that, the outer London and southwest landlords are experiencing the lowest level of reported arrears at just 32% respectively. Now, moving on to some kind of metrics in terms of how landlords are feeling. So the first question they asked is, how are you feeling about rental yields in the context of your rental business? The number of landlords who responded good or very good was highest in the east of England, the northeast of England, the southeast of England, and the southwest of England. So these guys are all sitting at 37, 36 and 35% of respondents feeling good or very good about rental yields. The areas where landlords seem to be feeling most negative about rental yields was Wales and the West Midlands, both of whom responded with 27%. Also, I should just say, joined by their colleagues in the northwest of England. Now, in terms of feeling good or very good in terms of just the kind of experience of having a letting business, so landlords who are feeling kind of most joyous about this are residing in the east of England, the East Midlands and also the southwest of England, whereas the landlords are feeling least positive about the prospect of their letting business, Wales at 14%, West Midlands at 17% and Yorkshire and Humber at 19%. In terms of capital gains, landlords who are living in or renting out property in outer London, the southeast of England and the southwest are feeling most positive about capital gains. Landlords in Wales and West Midlands are the ones who are feeling least positive. In terms of feeling good or very good about the UK private rental sector, just kind of more broadly, landlords in the east of England and the southwest are feeling most positive. Landlords in Wales and Yorkshire and the Humber are feeling least positive. And finally, confidence in the UK's financial market. So at the moment, the areas where you would find the most positive landlords, central London, southeast and southwest of England, Areas where they're feeling least positive about it were Yorkshire and Humber and the northeast of England. Incidentally, nobody who lives in the northeast of England feels positive or good or very good about the UK financial markets, so another nil return there. Now, what's interesting is that I've kind of mapped these all out onto a chart. And what I can see by looking at the various colour schemes that I've apportioned to this is that I think in terms of landlords that are feeling the least positive, Wales comes out top, which is interesting because Wales actually enjoys one of the highest levels, or the highest level of rental yields at 5.8%. They have one of the lowest levels of rent arrears, and yet they're one of the areas where the landlords are responding most negatively to how they're feeling about the market. More positively, it seems that landlords in the southwest across the piece are actually feeling most positive at the moment. Okay, and then finally moving on to our question of the week. So thank you very much to the gentleman who posted the question on the comments in YouTube last week. It was really, really nice to see someone kind of throw the hat in the ring. Please do keep them coming, guys. It's going to make my life a lot easier if you do actually ask some questions, as this feature is called Question of the Week. And what the gentleman very kindly asked is that he's interested to know what happens to mortgages when you transfer from a partnership into a limited company. Would the mortgages port over, or would you have to get new mortgages? So what we're talking about here is where someone is going through the process of what's called incorporation. So essentially moving properties from their own name into a limited company using an incorporation structure where for a period of time the properties sit within a partnership. Now, in that situation, the properties when they're in the partnership are still owned in your own personal name. So if you had a mortgage with somebody like Birmingham Midshires or the Coventry, lenders who don't touch limited company lending as an example, the mortgages, you can start running as a partnership, no problem at all, because the actual ownership of the property stays in your personal name, so no problem. So you can do that stage without having to disrupt your existing mortgage arrangements. However, it's when you move the properties into the limited company, so kind of at the final stage of this process, it becomes a bit more tricky. So at this point, the ownership of the property totally changes. It goes from being in personal names into the limited company. Now, in that point, because it's actually a kind of almost sale and purchase transaction because it's moving to a new legal owner, lenders would say, well, okay, it's a new owner, you're selling the property on, so you're going to have to repay us the mortgage. Now, lenders like the Mortgage, sorry, not the Mortgage Works, BM Solutions and the Coventry, they don't lend to limited companies. So at this point, they're absolutely going to step away. You're going to have to redeem your mortgages with those kinds of lenders. And it's not just those two, it's many, many lenders. So think Virgins, NatWest, Santanders, it goes on and on. Now, there are a couple of lenders who actually allow you to incorporate mid-mortgage term, mid-mortgage product without disrupting the mortgage arrangement. And this is very, very few lenders. So the lenders who will allow you to have the property and the mortgage in personal names and then transition into the limited company are Paragon, Kent Reliance and Shawbrook. These guys understand that actually if you move across, fundamentally nothing has really changed. It's the same people offering personal guarantees as held the mortgage previously. The security hasn't actually changed. So they do allow this to happen, but it's only those lenders. Any of the other limited company lenders, so think about people like Precise Mortgages, Hampshire Trust, Keystone, Fleet Mortgages, long list. These guys don't allow this mid-product incorporation kind of piece. So if you had a mortgage with those guys, even though they can lend to limited companies, because it's a change of legal ownership, they would still expect the existing original mortgage to be repaid, even if you were then to subsequently take the next mortgage with them as well. So I think the advice here is if you are in a partnership stage or thinking about incorporation, and you're faced with that difficult situation where you've got to go through 3 years of being in a partnership, your mortgage rates are about to end. You don't want to kind of take a 5-year fixed rate now with a kind of vanilla lender and have to repay the mortgage down the line to then start again with a limited company. Then one of the things you could consider doing is using one of those lenders who do allow incorporation mid-product term. That would allow you to essentially move seamlessly from individual names on partnership into the company. Although that would also limit then, I guess, if you want to do some capital raising at the same time. But I think the kind of real message here is it can be done. If you want to do that, it's very, very complicated. So my best advice would be just give us a call if you are in that situation. But I hope that helps answer that particular question. Please do keep them coming. And that's me signing off for this yet another week of MFB News. Thank you so much for watching. I hope you found that helpful. And like I said, I do hope we'll see some of your lovely faces at the investor show over the weekend. But if we don't see you there, hopefully I'll see you again same time next week. But if you do have any questions, you know you can give us a call 0345 345 6788 or have a look at our website mortgagesforbusiness.co.uk. Until next time, look after yourselves.